Good evening, everybody, and a very warm welcome to this event. My name is Nicholas O'Regan. I'm the Associate Dean for Research and Innovation at the University. I'm standing in for Jane Harrington, our Pro-Vice-Chancellor and Dean, who is currently travelling abroad. It's my delightful task to chair this evening's proceedings. I'm going to be brief, I should add, because you've got a lot in store for you. But I would have to say that I'm delighted to open up a new series of the Bristol Distinguished Address Series, and also having some new partners in the form of the Bristol Junior Chamber. All our partners, as you see on the screen behind me, are listed, and I think there are 10 or 12 there now. So we're particularly pleased to have all those partners on board. One of the aspects I wanted to briefly tell you about is our Team Entrepreneurship programme, which is one example of what we do at the university to meet the aspirations of our career-minded students and help support the regional economy, providing graduates that businesses wish to employ. You may already know, of course, that UE Bristol is in the top 12 universities over the last 5 years, consistently over the last 5 years, for graduate employment. And this year, the university has had its best graduate employment figures yet, with some 96% of graduates employed within 6 months. That's a tremendous achievement. That's also, of course, the 7th best employment record in the country. Needless to say, we are very proud of the success of UE Bristol, the quality of its research, teaching and executive development work, and which is, of course, all geared towards practice, which is, at the end of the day, what really matters. Now, enough of the advertisement. The format for this evening will be as follows. We have normally a student soapbox for about 2 minutes. George Sanderson will take that. David Penchard from the IOD has the honour of introducing our distinguished speaker, Leo Quinn. After that, Ian Mean from the Western Daily Mail, Western Daily Press. That's a Freudian slip. We'll be conducting questions and answers. Martin Boddy, Pro-Vice-Chancellor, will give a vote of thanks, and then we will all adjourn to the ante-room for some wine and some nibbles. So, in all, it should be a very interesting evening. So, relax and enjoy it. George, it's all yours.
So, hi everyone, I'm George, I'm 20 years old, and I'm a student at the University of the West of England, studying team entrepreneurship. I had a book published at the age of 13 which sold over 2,000 copies and made the BBC News, but I always felt disengaged with the education system. That is until I came to the University of the West of England. I've done some amazing things since during the team entrepreneurship course. I've been to Paris for the Seoul Global Forum, I've gave a speech in the House of Commons, and I've also started up a student market research company, QinetiQ, with my partner over there, Jamie. For QinetiQ, we've had private sector clients over the past few months who have had Ainsworthbury, a local frozen yoghurt company, Cloudance, a new social media site looking to break the UK market. But we met with Stephen West around 2 months ago, and this is where we think we've found our golden nugget: improving retention rates at universities across the UK. We've found out that there's a disengagement between what students actually want from universities and what they provide. We want to bridge that gap through the student voice. We can be the voice of the students that lets the university know exactly what students expect from their university. This is a £1 billion problem across all of the UK, and if we can solve that, we feel it'll be an amazing feat. And what a great time it is for enterprise. Lord Young published an article today saying that the United Kingdom is currently the perfect platform for start-up businesses. Since 2006, the amount of start-up businesses created by under 30s has improved by a massive 70%. And Bristol, what a great platform to be an entrepreneur in. We've got new innovative companies such as The Skipchen, which I think some of you might have seen on the news recently, a new restaurant in Stokes Croft that recycles old food thrown out by supermarkets and sells it on at a cheap price. We've also got big, huge companies such as QinetiQ pushing forward massive cultural change in businesses. And we've also got the Mayor of Bristol pushing forward emerging markets such as big data. One, for me, is the biggest, most exciting market around at the moment. So let's create something new and build on what we've already got. Thanks for your time, and see you all for drinks.
Wow. Wow, can you hear? That was great. Very, very good. Bristol is an amazing city, and we are in an amazing room. A warm welcome to you all from UWE and us from the Institute of Directors in Bristol. Congratulations to Sam Evans and all the great UWE team for organising this evening's event so well in this historic Bristol Council chamber. My name is David Pinchard, MD of TransformationLeaders.com, and I serve on the IOD members steering group of some 500 IOD members here in Bristol. A number of my colleagues are also here this evening. Last Friday, the IOD held our own annual convention in the Albert Hall with around 2,000 IOD members and guests present. We can report that the Chancellor performed well, alongside a stellar cast of speakers, including the truly remarkable Jimmy Wales, founder of Wikipedia. Some years ago, Professor Nicholas O'Regan started this distinguished address series at UWE. I remember those early days very well. The speakers were remarkable, the insights huge, the audience is tiny. But before clever students and clever business caught on, which is why we're all here today. We're proud in the IOD, an organisation founded in 1900, 114 years ago, to represent UK company directors, to be associated with these remarkable and valuable UWE events. They're packed with insight, and I'm sure this event will be very much the same. I remember Lord Burns, in an early UWE address in the series, who ran the Treasury before being elevated to the Lords, then went on to chair Abbey Santander and M&S, delivered a fascinating observation on his own extraordinary career as an economist, a public servant, and then a rewarding later career helping to steer the boards of major PLCs. As head of the Treasury in 1997, he handed over a UK Treasury to New Labour and Chancellor Brown in great shape. And look what happened by 2010. Famously, there was that unforgettable note left for the new coalition to read, "There's no money left." Do you remember that? Amazing. Right. Earlier this year, we welcomed the chairman of Tesco and his distinguished address. I'm sure some of you were there. Put up your hands if you were at the Tesco address. Even then, one could smell the storm clouds brewing there. Never let it be said that life at the top of a big company board is overpaid and easy. It isn't. Today, we warmly welcome Leo Quinn, CEO of QinetiQ, a FTSE 250 company, $2.5 billion of turnover, full of people who know how. 550,000 knowledge workers inside there, operating in 40 countries. Originally part of the MOD, but preparing for flotation in the early 2000s, it signed a 25-year partnering agreement to provide the MOD with innovative and realistic test and evaluation of military and civil platforms, systems, weapons, and components. It was successfully floated on the London Stock Exchange in 2006. This is a company that is always on the hunt for the next generation of clever people, in particular, great engineers, great mathematicians, great physicists, great software engineers, and so on. And don't think that QinetiQ is just a server and inventor of defense innovation, drones and the like. There are significant applications coming up in the civil side as well. At the helm, Leo Quinn joined as Group Chief Executive in November 2009, from CEO of De La Rue PLC for the preceding 4 years. Previous companies have included the role of CEO of Investors and 16 years at Honeywell. His first 2 years at QinetiQ were not easy. The balance sheet was heavily indebted. Now the company has good reserves. Their service division, in a report published a few days ago, was performing well, but changes in MOD transformation going on, a lot of it up the road in Abbey Wood, is likely to create some short-term uncertainty. Leo is clearly a true transformation leader. Changing cultures lies at the heart of it all. Ladies and gentlemen, let us this evening warmly welcome our distinguished speaker for his address, Leo Quinn.
Good
you want that? Oh, no, I've got it. Can you...
Right, 1, 2, 3, 1, 2, 3. You got me? Great, good. Let me just compliment you on your speech and ask you a favour. Next time we're presenting together, can I go first? You talked about graduates leaving university. It's very interesting. I'm an industrialist, and I'm not looking for graduates in reality. What I'm looking for is leaders. And it doesn't matter in what way you lead. The fact is, we need leaders in companies. We don't need graduates. So think about it as you're going through your education. Get all of your skills and all your qualifications, but the real thing you want to develop is your leadership skills, and that's what's valuable to industry and what's valuable to me. Let me start off, and this story is really about the cultural transformation of QinetiQ, and it's my story, and it's what's actually transpired in the company. Now, I want to ask a question. Is there anybody from, from the MOD here? Any of my customers? Oh, great, welcome. Well, I hope you're going to enjoy the story, because I think it's a bit of fun, personally. Right, let's just start with who is QinetiQ? QinetiQ actually comes from a company which was a government department. It was a research department called DERA, which was the Defence Evaluation and Research Agency. And that's what we do. We evaluate and we do research, in essence. The company is famous for the fact that it's invented many things, including radar, jet engines, thermal imaging, LCDs, none of which we've actually ever commercialized. Other people have gone on to do that. I quite like the idea that in 2006, when the company went public, that it was called QinetiQ. And in being called QinetiQ, the way to think about it and what it does is really from James Bond, and it's the Q in James Bond, because we invent some of those really clever things that make bad things go away or good things happen. In terms of leadership, I just want to touch on this for a few seconds. Day one, when you join a company as a leader, is a lonely place. It's a lonely place because, in effect, people look to you for all of the answers, and what they don't realise is you don't actually have them. The second thing is about leadership is that the difference in life between winners and losers is that winners take action. They actually do something about it. I'd far rather fail for having taken action and done something than actually having done nothing and fail because I did nothing. So if you want to be a leader, you've got to actually go and do something. The other thing to remember is that invariably when you arrive in any company and you're about to enter a transformation there's quite a bit of bad news still to come. And if you want to write something down, which you'll find is quite powerful, is bad news early is good news. And the reason for that is that if you know things are bad, you can start to do something about it and do something quickly. So it's back to this thing about, it's about taking action. I think you also, in a company, have to have a set of principles. You've got to stand by something. You have to live by something. By the way, if anybody feels their eyes are closing, don't worry. I'll see you and I'll ask you a question. For me, this model up here is what I've run my companies by for many, many years. And my number one priority is market share growth. So it doesn't matter to me if my industry is declining or collapsing around me. What I want to do is I want more share than anybody else. And if I'm doing that, I'm growing relatively. The second thing is how do you do that and get right to the top of the pyramid? It's about focusing on the customer. It's about doing great things for customers. And I describe it about creating raving fans. And what's a raving fan? A raving fan is somebody that you've done such a good job for, they extol your virtues. And by extolling your virtues, they become your sales force and they do the selling for you. And that's really important. And the way you get raving fans is you meet the requirements and the commitments you make. It's as simple as that. You don't have to go beyond, you just have to do what you said you would do. The other thing to create raving fans is actually you've got to have great employees. And so it's important that you've got good, motivated, dedicated, focused employees because they're the only people that create raving fans. You also have to have investors because people have to provide you with the cash to run the business. So fundamentally, running a great enterprise and growing market share is about satisfying those customer needs. It's about having great employees and you have to satisfy those needs. And it's about having investors, and you have to satisfy those needs. So you've got a triumvirate that you're always juggling. Now, it's quite interesting. Invariably, that juggling act goes out of balance from time to time. So if I take you back to 2008, 2009, who do you think was in charge of those three people? Was it the customer, the employee, or the banks and the shareholders? It's an easy question. They get more difficult. I'd answer this one now if I were you. Okay, it was the banks. Because at the end of the day, cash was king. So they were in charge. So and it's pretty obvious that all of the actions and things you do are to solve whatever is that investor, that bank problem. So today, as we stand here now, who's in charge in that triumvirate? Because it's moved out of balance. It's no longer the banks. So who do you think is in charge and actually has the most power in that triumvirate? Actually, no, it's actually the employee. And why? Because in a company like QinetiQ and an engineering company, there is not enough skilled engineers around to do all the jobs that we want. So there's a shortage of skills, there's a shortage of engineering, there's a shortage of scientists. And what we have to do is we've got to make sure as QinetiQ that we're the best employer of those people. So we have to earn the right to employ those people. Interestingly enough, I made a decision recently, which was to make an appointment in my company, which was to put the director of engineering in charge of human resources and call him my director of capability. And the reason I've done that is because he's the best leader of engineers in the company, and he's the best at creating an environment that attracts the best people in terms of engineers and scientists. And so in order to recognize that we're competing for the best talent, we've put the most talented person in the company in charge of that function. The other principles we have is we drive the company through productivity. We look to achieve 5% productivity a year. Why is that important? It generates cash, and the cash goes into the other pillar, which is actually it's the commercialization of innovation. It's not free to commercialize things, so we need to generate cash from the core business to help pay for the next generation of businesses. And interestingly enough, you mentioned Tesco as a recent speaker. Well, if you read the bottom there, if you can see it, we've had a foundation which says it all starts with ethics, integrity, and reputation. These are hard-won assets, and they are very, very easily lost. And you can see what's happened when Tesco's reputation has been tarnished. What's happened to its share price? I think it's probably half what it was in the last 3 or 4 years. So you have to start with a set of principles, and these are the principles that we use. So let's go back to QinetiQ, and what was the problem we were actually having to solve? Back in 2009, QinetiQ had its own crisis. And that crisis was that since it was privatized in 2006, it had actually taken its available cash, had spent it on restructuring the company, making it smaller, and also expanding into the United States. So it spent over $1 billion in acquiring American companies. Those American companies had not really performed to the level that they should have given the investment. So effectively our debt went up and our profitability and cash generation went down. So in 2006, we found ourselves with something like £535 million worth of debt on the balance sheet. And then we faced into a crisis where we delivered 2 profit warnings where effectively our profit divided by our debt was approaching 3 times. At 3.5 times, you take the keys of the company, you hand them to the bank. Whichever bank has the most debt will invariably take over. So we had to deal with the fact on day one, literally, we're looking at a company that's got great science, great engineers, great innovation, fantastic customer in the MOD, so thank you for coming. And it's virtually at the point of bankruptcy. So if you breach your covenants, you're in a very dire situation. If that was bad, it got even worse because it was quite clear that the company had not adapted its cost base over the preceding 3 years to match its revenue generation. And in not adjusting its cost base, on day one, we actually had to restructure the company and make an announcement that effectively 10% of the organisation would actually be laid off. So if you think about it, we had a situation where the banks potentially, financially, we were going to breach our covenants. We'd announced a restructuring. We had £535 million worth of debt. The restructuring was going to cost £100 million. And we actually didn't have any money in the bank to pay for the restructuring, even though we had announced it. So my next lesson is that, if you're going to actually change the culture in a company, you have to have a burning platform. And if you don't have a burning platform, go and create one, because it's the only way to get people's hearts and minds to actually change. Our burning platform happened to be real. We had the debt, and we had a situation where we'd announced a 10% restructuring. We didn't have the money to pay for it. The reason that the restructuring was 100 million was because the company had originated from the civil service, and the employees had civil service terms and conditions. And this, by the way, was their right. They had earned these over time. And to give you an example of how onerous these terms and conditions were, there was a senior secretary who we were thinking about making redundant, who was earning £40,000 a year. And the cost of redundancy was going to be £150,000, which was 4 years' salary. Now, by any measure or any justification, that's an immoral amount of money for someone who is going to leave us one day and probably within 3 months have a new job on more money, because we were effectively quite a low payer at the time as well. So what we did is we took the problem back inside the company, and we actually said, okay, how can we help ourselves to solve this problem? So we had to find a way of actually delivering the restructuring and actually paying down the debt. And we could not afford the 100 million to do the restructuring, so we actually went out to our employee base and we explained that in order to actually fix the company and get it into the right place, hence to put the fire out on this burning platform, we were going to have to change all of the employees' terms and conditions of employment, whereby they would be moved to something which is deemed to be a more economical amount of money. So, in effect, what we did is we explained to people that we've got, as a company, £1 to spend. And we can take that pound, and what we can do is we can spend it on assets to actually make you more productive, computers and whatever. We can spend it on acquisitions that will give us more market share, enhance our returns and grow out of the problem. We could actually take the pound and put it into the pension hole, because we had about a £300 million pension hole, so that when you leave the company, you'll actually get your pension paid in full as opposed to in part. Or what we can do is we can actually use it to prop up the current pay and reward and benefits that you get, so that, as an employee, you feel that you're being fairly rewarded. Or we can give the pound to departing employees. So effectively, those people who would be leaving the company would leave the company with a wheelbarrow of cash, and in some cases up to £250,000. But the population that was left behind would just have to work out and make do, because there was no cash left. Pretty dire question and a pretty dire set of alternatives if you think about it. The other thing that we said that we were going to do in restructuring the 10%, we said for the first time in the company's history, we're not going to do it via voluntary. Because what happens when you do voluntary attrition, the best people leave. And why do the best people leave? Because they can get jobs very easily elsewhere. So we said, no, we're not going to do it that way. What we're going to do is we're going to take out the bottom 10% of the company. And so what we did is we had to explain our message. And this is an important point about communication. We had to go out and explain to 7,500 employees that it was important that they voted in favour of actually halving their current terms and conditions and capping them at £90,000. Now, if you think this is not particularly difficult, let me remind you that this was now the beginning of 2010. It was before we had the coalition government. It was before the defence industry announced the Defence and Security Review. So this was really treading new territory. We went out to hangars and we explained the situation to people. We went to offices. We went all around the company. And if you think lonely is lonely, you try doing that. I can assure you it's not a pleasant task. But it's interesting, if you talk to intelligent people intelligently, it's amazing what they'll come back with. And they wanted the companies to survive more than anybody else. And the promise they wanted is that if they signed up for this change of terms and conditions, would that give them a secure future? And the answer is there's no guarantees in this life, but the fact is, without signing up for it, the future is doubtful and rather perilous. So anyway, we went out, we put it to the vote. Interesting enough, only union employees could vote because we had a collective bargaining. and the employees voted 3-1 in favour of accepting the reduction. So what then transpired is we had reduced the bill of restructuring the company to 33 million from 100 million, and we paid for it by actually going back to the shareholders and suspending the dividend for 12 months. So effectively, we created a situation where the shareholders paid 33 million because they forewent their dividend, and we used that to restructure the company at 10%. So having that burning platform allowed us to do something which had never been done before. But it's really important. It did two things. It set the company up on a platform for the future whereby it could be successful. And the other thing it did is in the past, we had a leadership and a management in the company where the leadership and the management weren't in charge. And the reason they weren't in charge is because if somebody said, well, I'm not going to do what you've asked me to do, or they did a bad job, there was no sanctions. You couldn't really fire anybody because the way the grievance procedures were set up. And you couldn't pay them off because the amounts of money were just absolutely outrageous. This time, what it did is it actually reduced the cost of restructuring the company and held management for the first time accountable for running their businesses and doing the jobs that managers and leaders are supposed to do. So, when you're starting out in a transformation, what you've got to do is make a public declaration. And the public declaration needs to tell people what do you stand for and what are you going to do and what are they going to experience over the next 12, 24, 36 months. And in QinetiQ in 2010, we announced something which we called a self-help plan. And that meant we were going to sort this out internally. We weren't going to go to the banks to bail us out. We weren't going to go to the investors. We were going to sort it out amongst ourselves. And we had ample opportunity to do that because we had excessive costs. We were bloated. We weren't a customer-focused organisation. We weren't as lean as we could be. We had a lot of areas for improvement. And we said we're going to do three things. What we're going to do is we're going to focus the portfolio, we're going to transform the culture, and we're going to strengthen the balance sheet. So effectively, that's what we embarked upon. And in the first instance, strengthening the balance sheet, we said to all of our employees, over the course of the next 12 months, we have to take £50 million out of our costs, which is a sizable amount of money, and we have to take 100 million out of our working capital in order to reduce our debt. And in doing that, what we did is we said, if we're going to do it, we have to measure it. Because in life, if you don't measure things, they don't get done. You know, it's very interesting. I've always learned you don't have to bully people into doing things. You just have to say, you're empowered to go and do it, and this is how I'm going to measure you. And so what we did, we created what I call a single reporting pack, which for us is a financial pack, which we ran every business by. Everybody had the same measures, and everybody knew where they were every day. When you get into your car, you know where your petrol gauge is. You know where your speedo is. You know where your rev counter is. You look at those and you drive your car by them. When you work within QinetiQ, you've got the same thing for your business, and you actually drive your car or drive your business by that. And it's very interesting is we only have one version of the truth. I remember some of my first meetings, people would come along with spreadsheets and they'd say, no, it's right because it's here on the spreadsheet. And then I would pull out the pack and say, it's wrong because it isn't right in the pack. And your job is to explain why the pack's not right, not why what you're telling me is right. So really interesting that, and important that you start with one version of the truth. I can see some of my compatriots smiling here because I know what it's like in their world. This idea of having a dashboard through which to drive the company, whether it be employee satisfaction, whether it be customer satisfaction, or whether it be financial performance is really, really important. And then you actually have to have the rigor to follow up systematically with a management process that actually allows you to check and monitor these things are happening. In our company, every Monday at 1 o'clock we meet as an operating committee, and we just say what's happened in the last week, what's happening next week. Once a month we meet and have a discussion around how's the business performing for half a day. Once a year we meet for a leadership conference where we bring our top people in. So it's about the rigor and sustainability. In terms of cultural transformation, remember I said focus, cultural transformation, strengthen the balance sheet. In terms of cultural transformation, we did three things. We upgraded the leadership, we leaned out the processes, and we empowered the employees. The way we actually upgraded the leadership is very, very simple. what we did is we said to people, this is how we'll do it. Results versus behaviours. Good results, good behaviours, promote them, push them as fast as they can, give them bigger jobs, give them more responsibility. Bad results, bad behaviours, no apologies, you're fired. People who actually don't deliver and don't behave professionally and properly don't deserve to be in the organisation. So what do you think we did to people who actually had good behaviours but bad results? Anybody? Say it again? Yeah, coach them. I call it the school of second chance. The idea is they're good people, they just might be in the wrong environment or the wrong situation, and our job is to work with them and help them. What do you do with people who have good results and bad behaviours? Coach them. You'd coach everybody, wouldn't you? No, I have a view, and it says that the numbers, the numbers no longer protect you. So in our world or in our company, what's important is behaviours are more important than results. Okay? And everybody understands that, and that's how we judge talent. So interestingly enough, when we announced the fact that that's how we're going to manage our leaders, I think I've switched this off accidentally, have I? That's it. How we're going to judge our leaders with 7,000 scientists, everyone who wanted a spreadsheet, the criteria, a weighting, and made it into a process. And I said, look, far too complicated for me. When you went to school and you were picking the football team off the wall, you always knew who the first three off the wall were, didn't you? Yeah? And you always knew who the last three were. Okay, business is exactly the same. We all know who make great contributions, and we all know who do really good jobs. These are the ones you've got to look after, protect and nurture, because they're your succession. At the other end, the people who don't do good jobs and are not interested and don't really want to be there, the idea is they shouldn't be there, and all you have to do is help them on their way. Do you know, I've met more happy people who've worked for me and left me because they're now doing something they want to do. You know, life's not designed to be a purgatory. You shouldn't stay in a job just because it gives you a salary. Go and do something that's meaningful, has an impact. You know, don't hang around just because, well, I feel I've got to stay here because I don't think I can go anywhere else. You know, there's lots of great jobs out there. There's lots of areas you can make a great contribution. You just got to be prepared to go and take the risk. So, leaning out the company. In terms of leaning out the company, we did two things. We did one major thing, and that was we leaned out the sales and delivery process. And by doing that, what we were looking at is how do we ensure that we make selling, acquiring customer requirements a science as opposed to an art? And then how do we make sure when we've done that, we deliver what we've actually sold? That was a program which we called Fit for Growth, and that took us about 15 months to implement, but it became really clear we were having really difficult problems delivering against customer requirements, and the customers were unsatisfied because no one actually wrote down the requirements in the first place, and then they actually delivered what they thought was in the customer's mind. You can't do that. You can only deliver what's actually written down. So it's really important to get your sales and delivery process aligned. The other thing we did is we put training and effort into people. So what we did is we actually trained people on what I call value-based selling, where you're not selling widgets, you're selling engineered scientific solutions, and you've got to understand what's the customer requirements, and you have to sell the value of what you're delivering to them. The other thing that we did is we taught our people, you know, not to sort of say yes every time and sort of fall on their sword because they're sort of embarrassed to ask for the right amount of money to do a job. So we actually put them on a negotiating course. It turned out to be our most popular course in the company. And what it really did is it actually built confidence. And every time we kicked off one of these courses, I would go along and I'd ask a question. So if you think of our primary customer as the MOD, how many people in the room think you can negotiate with the MOD? Not a single hand went up, not one. And I said, okay, has anybody in this room ever been to a meeting with our customer and actually come out with a reduced price? Everybody's hand goes up. And I said, OK, has anyone managed to keep the price but have a wider and increased scope? And everybody's hand goes up. So I said, so you clearly can negotiate with the customer, can't you? But it's only in the wrong direction. So today, when I ask my people, can you negotiate, new people, they say, yeah. And do you know what that tells me? It tells me the organization's grown up. You're having an adult-to-adult conversation that says, look, we want to buy something, we've got a problem, we need to actually get it solved. And then on the other hand, we've got a solution. And between those two, there's an amount of money which is a fair exchange of services. And so what we've done through Fit for Growth and leaning out the organisation is we've built confidence in our people to have adult conversations. And that's really, really important because engineers in the main are not like George here. They're pretty shy, they're retiring, and they're not very good at putting their own case across. So really, really important that we train people. And then empowerment, we have something in the company called My Contribution. And My Contribution is about how do we get all of our employees to understand it's their job on a daily basis to come up with things that add value and improve the competitiveness of our business. And so, in effect, we end up with projects that come from all over the globe about initiatives and just interesting ways to drive productivity, to save cost. One of my favourites is one of our ranges in Aberporth, West Wales. They gave up all of the company cars and vans and actually got bicycles. So our employees are now they're now fitter, and they actually ride around on bicycles, which actually saves on fuel charges, and we no longer pay leases on vans. Now, what's interesting about that story is not so much that they're fit, but if you think of us at head office, you know, we would never have thought of that. You know, it would never have dawned on us, and we're all too busy looking at big problems to notice the small ones. If you think of 5,500 people all coming up with innovative small improvements within the business, whether it's a billing improvement, a cash flow improvement, an energy efficiency improvement, that's a huge change in terms of your competitiveness and your profitability. So empowering your employees and engaging them to be part of the solution is really important. Now, one of my favourite slides. I am going back in time a little bit, but when we arrived, this is what we found. We had this ball made up, and this ball is a few thousand elastic bands. It even bounces, and by the way, the bits that hang off it, that's the way we actually performed. What we had to solve in 2009 by focusing the company is where was profit made and lost? Nobody really knew. And what business models did we have that were actually scalable, that we could grow a brave new future with? And we systematically spent time breaking the business down into intelligent business units, which in the first instances was US services, UK services, and global products. And then within those, break them all down again into mission solutions, air, weapons, training and simulation, whatever you want to call it. Now, what's interesting, if you go back to the measurement slide I showed you earlier, every single one of those men and women on that slide up there was in charge of a P&L which was constructed in a standard way through which they drove their car every day. And if we decided to change a leader from one division to another, he got out of one car and got into another one. It was exactly the same dashboard. So what we had created over a period of 2 to 3 years was a set of tools and techniques where we trained every single one of our business leaders to drive that car with that dashboard in the most efficient way. So what we're doing is we're building confidence, we're educating, and we're actually training people to be the next generation of leaders. We subsequently strategically looked at the businesses, and because our US business was run through a board which we had no control of, we made the following decision. We actually sold it. This was the business that had been bought between 2005 and 2009, on which we'd spent $1 billion. And effectively, we'd acquired an asset that we could not control from a UK PLC. And there's two things here, is that when you don't control something, yet you're responsible for it, you know, separate. Don't attach your reputation to something which you can't control. We sold that for $200 million, which was effectively a write-off of $800 million in that transaction. So bad news for the shareholders, but great news for the company, because we can now focus on the future and not be distracted by the past. recruitment. We all recruit people. Our number one priority within QinetiQ is actually to recruit the 5,500 people that are actually on our payroll today. Why do you imagine that is? Yeah, people have choices. You know, they actually vote with their feet, and when they've walked out of the door, it's too late. So you have to understand, my philosophy is you have to earn the right to employ the people you employ today. And every year we have a leadership conference, and at that leadership conference we invite like 300 people. You have to invite the top 100, otherwise they get upset. But we go out to the ranges and we invite the people who are on the ranges, we invite apprentices, we invite graduates, and what we're doing is we're actually recruiting them. And so we re-recruit every year, and the advert we use is this one here. It's men and women wanted for hazardous journey, small wages, bitter cold, long months of complete darkness, constant danger, safe return doubtful, honour and recognition in the event that we're successful. Now, who would sign up to that? But they all do, every year. And the original advert is allegedly the Shackleton advert for his trip to is it the Arctic or the Antarctic? I can't remember which one. But you have to remember, you have to earn the right to employ the people who work for you. And don't take them for granted. Relentless communication comes with communication. You need to keep people on board. Every year we have a leadership conference. We stand up, we present to people, we go out, we walk the ranges, we stay in touch with the people who work for us. And the journey that we've actually gone down is actually denoted by this roadmap. I mean, we started off in 2010 by trying to restore the company to strength. We then went into actually building value within the company. We then said, we've really got to get some identity around why do people work for QinetiQ? Why is it important? We came up with the logo of people who know how. And, you know, our people really do know how. And I'll give you a story later to prove that. And then it came down to about building confidence. You know, it's important that you keep building confidence into people so they go out and take more chances and do more adventurous things. And as far as we're concerned, it's worked. So let's think we're now 5 years on from when I first joined, almost to the day. And how have we actually done? Well, if you look at cultural transformation, if you look at the bottom left-hand side, you can see the debt that we had as a company of near 600 million. Today is 200 million of net cash. So we've taken a situation which was a crisis and we've turned it into a fantastic financial performance. If you look within that, you can see there's a chart around working capital, and you can see how year on year, quarter on quarter, it's improved. And that's the result of actually the Fit for Growth initiative, where we laid out the sales process and the delivery process in terms of how we manage and better deliver to our customer requirements. And if you do that, people pay you on time. So therefore, your working capital improves. And the fact is, there's no quick wins here. You don't come along with a magic wand, tap it on the side of the lantern, and a genie pops out. This is hard work, day in, day out, meticulous, relentless focus on what you're doing. And we've been rewarded for the fact that we've done a good job, because look what's happened to our customer satisfaction. We've gone from 17th to 8th to 3rd, and that our performance is considered to be in the top 3 of the suppliers in our peer group. Now, let's face it, our financials have improved, our customer satisfaction's improved. Someone's got to pay for it. There's got to be a loser in this somewhere, doesn't there? Well, it's not the employees, because our employee satisfaction or engagement has gone from 550 to nearly 600, and each one of those steps in the graph is statistically significant. I'd make a bet today that next year our employee satisfaction will be 650, which is a whacking big change. And then finally, we keep an eye on the future. And we started something called the 5% Club, and I'll explain more about that in a minute, about we have to invest in the next generation. How am I doing for time? You can pull me off if I'm here too long or you're falling asleep. So, our journey, just very quickly. What we talked about in this phase up here called Fix is the first 24 months. focus, cultural transformation, strengthen the balance sheet. Our second period is called Win, and we've been in this for about 2 to 3 years, and it's about how do we actually focus our portfolio in order to maximize our core business, scale our explore businesses, and sustain the rigor around the test for value. And I'll explain what that means in a minute. And then finally, out of that will come our growth phase, where you actually look to get breakout growth. So what did the second phase, Win, look like? What's in it? This is really, really interesting. If you look at the left-hand side, you can see our core businesses. It's maritime, it's air, it's weapons, survivability, robotics, C4ISR. This core business, call it $1 billion, it doesn't really matter, isn't a good business. It's a fantastic business, because in most cases, we're the only people that actually do this. And this is a business whereby getting the customer requirements right and getting our delivery right, we've generated what are good cash returns. Those cash returns, coupled with the research and development that we do, spins off IP and the ability to fund that IP to commercialization. So what we've spun out of this core business is effectively a drug pipeline, which we call Explore and Test for Value. And they are effectively businesses or business opportunities which, by virtue of their maturity, could turn into future growth businesses or could develop into partnerships with other people to take them to market. And the only categorization we make is that when we say test for value, whether it be things like EX Drive, which is an electric drive motor, whether it be Muse, which is mobile electronic warfare systems, or whether it be Alarm, which is an early warning incoming projectile detector. These are, in the test for value, these are where we want to partner with other companies to actually license our IP and allow them to take it to market. In the case of our explore businesses, which are effectively drugs in our drug pipeline, which will sort of come to fruition in the next 2 to 3 years, we're looking at businesses which we have stood up, and those businesses are standalone businesses which we say we put a target of achieving about 100 million of revenue on. So, as an example, those explore businesses, we ask 3 questions. Is it real? Can we win? And is it worth it? We know the technology is real in those businesses because we developed it. Can we win is that we have competitively won business in all those areas. The question is it worth it? And in that explore area, in that part of the drug line, what we're solving for is a scalable business model. Can we scale up the business? One of the most exciting things we have up there is a business called OptiSense, where we take a standard telephone optical cable and we turn it into an acoustic sensor. And that acoustic sensor is used in downhole oil and gas for fracking. It allows you to actually see the frack and actually see the flow, which is actually quite unique because the ability to turn the light on at the bottom of the well is something you can't do today. And you can only do it using an acoustic sensor like that. So some of those businesses have real growth potential within them. So that's effectively what's going to seed the future growth of the company. The other thing that's going to support the future growth of the company is something called the 5% Club. And I think this is a really important initiative that we started just over a year ago. And what it is we've made a public declaration within QinetiQ that 5% of our employees will be made up of graduates or apprentices who are on formal training schemes. Now, why have we done that? Because we're not really known to be a benevolent organisation. The reason we've done it goes right back to my very first slide, and it's really around the fact there's a shortage of skills and that there isn't enough engineers. And if the industry doesn't actually make the investment in investing in this next generation of skills, there's not going to be enough engineers to do all the work that's going to be around. So our public declaration around the 5% Club is, in the first instance, how do we actually generate skills? The second part of it is around youth unemployment. We're lucky in the UK. We have, I think it's about 18% youth unemployment. Spain and some of the other countries, Greece, have 49%. You know, that is a huge social problem. You know, you take for granted that you'll leave here tonight, you'll walk across the common, and you'll get home safe. If you've got 49% youth unemployment, it isn't a long way from the point whereby you can't guarantee that safety. And if it's not a situation whereby you're confronted with violence, it could easily be a situation where people start out having fun on the internet, and the next thing you've got a bunch of cyber crime going on, which started off as good fun, but then develops into something which is actually quite criminal. So it's really, really important that we make an investment into getting the youth of this country and even other countries into jobs where they can actually make a productive contribution and where they have a set of skills that will serve them for life. So the 5% Club for us is very important. I think there's 47 members of it now. Companies like KPMG, Babcock, MBDA, some big names. And it's about making a public declaration that we're going to invest in training people, and then it's putting in its annual report under corporate social responsibility and measuring it. Because remember, what gets measured actually gets done. So important. So if you're looking for a company that's got the 5%, you know that they're interested in actually hiring you. So finally, you know, I started off by telling you that leadership is lonely. I likened it to, everybody knows Speaker's Corner in Marble Arch. It's like standing on an orange box there with a microphone on your own and nobody's listening. That's day one in the job. Where we are today in QinetiQ, the problem is we've only got a few orange boxes and everybody wants to get on them. What we have is 5,000 employees, all pointing in the same direction, all taking one small step, which is a very, very big change. So on that note, I'm going to hand you over to the quizmaster.